Hey everybody, it's Jim Hiles from First Capital and Go Plan 101. It's September the 20th. Happy Monday. Today is a red market day, contrary to my slide here. Pretty tough opening after a pretty tough Friday. So let's do a little recap, tell you what's going on a little bit as far as we can tell. So last week was pretty choppy. Both the techs and actually small cap everywhere kind of just sold off a little bit into Friday. It was a triple witching Friday for the options market, so it always makes for a volatile session as these things get fulfilled in terms of their contracts in the option market. So it's goofy. That's the only way I can say it. We did see some inflation moderation. Crude kind of popped up a little bit, but we also had this bad news out of China, and it got worse today over the weekend with the Evergrande real estate debacle. As a company in China that basically is looking like it might go under. Pretty good size real estate development company with a lot of loans on it. It is definitely having a ripple effect around the globe, but I think it's also a function of the momentum in our own market had stalled. We were kind of just sitting here for a couple of weeks, pretty flat. I think if you wanted to sell, you were looking for a reason to sell, that may have been it. When you talk about what's going on in the economy in general, we're coming up to the Fed here, which we think they're going to say nothing but nice things right now, on the way to tapering sometime in the future. But if you look at the market, we lost some ground over this past week. And you look at today, I'll go through today in just a second. Year to date, we're still doing fine. So let's not get crazy. We've had a pretty good return year to date, double digits across the board for mostly everything, except maybe for the small cap group, the riskier group. But let's take a look at what's going on from this perspective. Generally, when you see the fear increasing, and you saw the volatility also go above, I think it was 25 today. When those things happen, you don't want to fall into that camp. You actually kind of want to do the George Costanza, I think the opposite here. So when this fear gauge goes down, it's usually not a pleasant day in stock market pricing, but it's an opportunity day potentially to purchase, because that's when people are most fearful, when prices and markets are falling. A couple little things in here I'd share that goes off cycle here, but let's take a quick look at this. These bar charts are what are seasonality charts, and it says the percentage of months with the S&P is closed higher than it opened. This is from 2017 to 2021. You'll notice right here the September and October. October is the worst month seasonality-wise. September is the second to worst month seasonality-wise, which means the percentage of the months with the S&P closed higher than it opened is 60%, 50% in October. So this is not unusual. Let me tell you what everyone is looking at. They're looking at these wonderful little charts. For all you technicians out there who want to pay attention to this at all, it's kind of meaningless because it's such a short period of time, but the squiggles on a chart do make a difference to a lot of people. And this is the S&P from a weekly standpoint, looking back 3 years. It's kind of small, I'll just explain it. But we've had a sell-off in stock prices back to what they call a moving average. A particular event is a 50-day moving average line. A lot of traders will look at this line as what they call support. As long as it's above there, they're happy and they're going to keep buying. When it kind of corrects and goes below that line, that could be a trigger point in their algorithm or their whatever their technology may be, or maybe even their thought process to sell, because that's a down marker there. It's a line. It represents value. The other one that people will look at is the 200-day moving average, which is this green line in here, which we're pretty far above it. That might be about a 10% correction to get back down to the 200-day moving average, which would not be out of the realm of possibilities. We don't like, quote unquote, losing money. Keep in mind, you never really had it unless you sold it. So it's paper value. We do expect corrections to occur in the market, generally 5%, 10%, relatively healthy. It doesn't sound healthy, but that's what it takes to deal with the stock market. So if this turns out to be a correction which extends down to 5 or even 10%, I'd say that's fairly normal. We don't think it's a bear market. Not enough has changed in the economy. Things still look pretty good. So when you get back to the kind of what's going on in the fear and greed index, you might say, well, this could be an opportunity to kind of resort the portfolios. This is a tax harvesting opportunity as well. If you have a loss created by this draft downward, it might be a good time to swap horses here and get into something you might think that will do better going into year end. That's kind of what we're looking at. We'll book the tax loss, we'll move to a different investment, and look at the upside coming into the rest of the year, which we think is still there. So there are a lot of opportunities out there. We are still risk on. Long-term investors, stay with it. Short-term investors, you're probably looking at bailing out on a trade or two or more, depending on how you're set up. But typically speaking, we are staying risk on. We also think that the international markets may begin to play a little bit bigger role in terms of they're coming back primarily from two perspectives. They've kind of lagged us. So from a pricing standpoint, valuation standpoint, might be good opportunities. We've got an international portfolio called International Opportunities, where we invest into international companies, not countries, companies that we like, primarily led by technology. You also see financials in here, healthcare, cyclicals, industrial. So it's a portfolio of international stocks, which help round out the diversification play. So that's what's going on right now. Join us next week for more. Jim Hiles signing off. Thanks.